Well, in response to the Iran war, the International Energy Agency says its 32 member countries will unlock a record 400 million barrels of oil from the strategic reserves to stabilize soaring energy prices. Now, that includes countries like Germany and Japan that will now draw on their emergency stocks as the turmoil in the Middle East disrupts supplies. The IEA warned that the global oil market was facing unprecedented challenges due to the war. Here's the agency's executive director, Fatih Birol.
IEA countries have unanimously decided to launch the largest ever release of emergency oil stocks in our agency's history. IEA countries will be making 400 million barrels of oil available. This is a major action aiming to alleviate the immediate impacts of the disruption in markets. But, to be clear, the most important thing for a return to stable flows of oil and gas is the resumption of transit through the Strait of Hormuz.
Let's get some analysis now from Christof Rühl. He's an expert on international energy economics, having served as chief economist at BP and global head of research at the Abu Dhabi Investment Authority. Joins us from the southern German city of Freiburg. Thanks for being with us. Christof, what do you make of countries releasing hundreds of millions of barrels of oil from their strategic reserves? What impact will that likely have on supplies and prices?
Good evening. The problem is that what I make out of it is what everybody makes of it is a clear attempt to control oil prices and bring them under control. The problem, of course, is visible to everyone that you have a stock, which is oil reserves, which you can draw down, and then you have a flow, which is oil production, which comes again and again and again, in this case from the Gulf, which is not coming anymore as long as the strait is blocked. And in that sense, Mr. Fatih Birol is completely right. In order to really address that problem which we have with high oil prices, one needs to secure safe passage through the Strait of Hormuz. And as far as I can tell, we are just as far away from that as we were 11 or 12 days ago.
So instead, we've got this release of oil reserves. Are there risks associated with this move?
Well, you could always say that if something drastic like this happens, people will anticipate that there must be a real problem. And in this case, I think this is true, that this anticipation translates into probably the wrong expectations. Step back, what we really have is an oil market which was extraordinarily well supplied before the war started. Oil analysts would not disagree that, say, for the last 6 to 9 months or so, global oil supply was larger than oil demand. They would disagree how much, but most of that surplus was put into storage in the biggest oil importing country, in China. So we have actually a world outside of the Gulf where storage is high. We have the strategic storage in the G7 countries, the IEA member countries, 2 billion barrels, and a very, very large volume of oil. We have China very well, it's not only an IEA member, very well endowed with strategic storage, more than probably ever before. And we have a huge oil on the water, stored on the water, which is coming out of Russia, which has been sanctioned and has not been allowed into India and is looking for a home. So you have to ask the question, if the situation is not overly dramatic, and look around, it isn't. There are no queues in front of the gas stations. There are problems on the horizon, in particular in some industrialized island economies, which have no storage facility, like Japan, Korea, Taiwan. But in particular, where we are talking in Europe, there's at the moment no supply problem. So why this focus on oil prices? And part of the answer is the usual one. High oil prices mean inflationary pressure and therefore high interest rates. High oil prices may bring down growth rates somewhere. It may negatively affect very dependent economies. But there's also something else here. And this, I think, is very important in explaining this move. We have a very stable sort of global economy and very exuberant financial markets at the same time. So what we have is already, since before the war started, people guessing, is IEA a bubble? Is private equity causing troubles and running out of headroom? Is private credit, the cracks in there showing up, affecting the financial markets? People looking, what could bring these high stock markets down? And it is this gap in which these high oil prices, together with the whole uncertainty of the war spreading, affecting other countries in the Gulf and so on, is pushing into. And that's potentially a combustible mixture. If these high oil prices and the uncertainty and the spreading of the war translate into people selling their stocks and financial markets becoming shaky, that could become a problem.
Christof, thank you very much for speaking with us today. That was Christof Rühl.
And we'll discuss exactly that now with Stephen Beardsley from DW Business. Let's hope you can shed some light on this, especially on what effect this decision, releasing these strategic oil reserves, 400 million barrels, sounds like a lot.
Yeah,
what effect will that have?
This would be the largest coordinated response ever, the second largest now. If they reach these 400 million barrels, would be the response to Russia's invasion of Ukraine. Look, the idea is to take some strain off of a very tense market right now, provide some breathing space. So this can do something, but it's not going to do everything, right? So let's take that figure, 400 million barrels. The IEA says it wants that stretched out over 2 months. So if you divide that amount by the number of days, you're looking at an extra maybe 6 to 7 million barrels a day. What's been taken off the markets right now? About 20 million barrels a day going through the Strait of Hormuz. So
it's a quarter only that is.
You're less than half of that amount. Now, it can be a contribution. Let's say Saudi Arabia gets its pipeline, its east-west pipeline, going up to full capacity as it wants. That's another, I think, 7 million barrels a day. So you're starting to get somewhere, but it's not the full answer.
Will you and I feel that at the pump when we fill up our cars? And
well,
if so, when?
Well, when is going to be probably days, right? Days, perhaps more than a week, because countries have to auction these barrels off, they have to execute contracts, they have to schedule delivery, all that kind of stuff. So it'll take a little bit of time before it comes onto the market. Will we fill it at the pump? That's a good question. Yes, but will it be to the extent that we want is really the primary issue here. You know, in 2022, I was telling you there was a big sell of gas, or oil, I should say, from strategic reserves in response to Russia's invasion of Ukraine. The U.S. got rid of 240 million barrels, put it onto the public market. Now, later, the U.S. Treasury went back and looked at what that did, using several different estimates. And what it said was for a price that was about $4.15 a barrel at its peak, which is pretty high in the U.S., that ultimately it took off about anywhere between 17 cents and 42 cents for a gallon, right? So $4 a gallon. And then, so that's less than, in best case scenario, that's less than 10%, right? That's about 4 to 9% of the cost going down. Now, of course, keep in mind that the prices had skyrocketed much more than that. So there was some relief, but it's not the kind of substantial relief that you wanted. And even those estimates were probably pretty optimistic because they suggested there was one-to-one pass-through. But gas station owners also have a say. Will they completely turn their savings into savings at the pump?
So not necessarily good news for the average car owner there. But tell us more about these strategic oil reserves. Who has them, how much, and where's the stuff?
Right, the most developed economies have these reserves, and they were created in the 70s as a response to the Arab oil embargo, which was a time in which there was a massive oil supply crunch across nations, which really wreaked havoc on economies. Inflation really skyrocketed, and it caused a lot of these economies to think about their responses. And one was the coordination of keeping these reserves, and then talking about how to release when emergencies came about. So in general, these are kept in caverns, salt caverns in the case of the US, in the case of Germany as well. You have actual government stores kept there. Some other amounts are kept with private companies. And then you have others that may be kept with the drilling companies themselves in agreement with the government. So there's a number of different places where they can access these. And then essentially they turn on the spigot, which means they go to the auction houses and they auction this on the public market. Buyers take it and they deliver it that way. So this is oil that is stored.
Now, but these reserves are strategic. Is what's happening right now the right situation to actually tap them, or is it risky?
Yeah, that's always a question. One risk that actually can happen by tapping these kind of reserves is that the market reads something wrong into it. They say, oh my gosh, this is a much more serious situation than we thought. They're tapping the strategic reserves. And so investors get jittery and the market price of oil actually goes up, at least initially. So that can be one consequence. But the other aspect is very much a political one. I mean, look, reserves are created for situations like these, more or less. It's to really calm markets down, to create that breathing space while hopefully other solutions are found. And so I'd argue this matches the other kinds of scenarios in which we've seen them used. However, what we often find is that in some countries like the US in particular, the use of these reserves is very political. Or at least there are charges that it's political. When Joe Biden, for example, sold a bunch of strategic reserve oil after Russia's invasion, then his opponent said, look, this isn't necessary, you're just trying to win political points. But we know how in the US and in other nations, prices at the pump are really important. So every politician looking at gas prices going up right now realizes that he or she has a problem. And so it's a political response, but in a way it is strategic to try and create that, these coordinated responses, I should say, are strategic because they try and create that overall relief on the market.
Very briefly, if you can, Iran told the world today, be ready for the oil price to hit $200 per barrel. What can you say to that?
You know,
briefly?
the worst case scenarios we're hearing are about $150 per barrel, maybe a little bit higher, if critical infrastructure in Iran in particular is destroyed. Karg Island, you may have heard of this. So many of their exports go through this storage depot, this transfer depot. If that is hit, then you have a really big problem for a major source of oil on the global economy. Then you could see prices rise. Whether it reaches $200, that may be a little bit hyperbolic, but it could go up.
Thank you very much. Stephen Beardsley there, DW Business.